Guys, this is Rudy coming at you live from Palm Beach in Florida. It is Sunday. It is August the 18th, and I thought just for fun, I'm going to take a few minutes and share with you some of my equity holdings as it relates to energy. Now, I've done this many times before, but quite a number of people have said that they enjoy when I do a side-by-side comparison. Now, of course, you may have equities that are similar to mine, or otherwise you may have equities of mine that you might be interested in investing in, or otherwise you might be interested in making a new, opening a new position in one of these equities. So I thought I'll do a sort of typical side-by-side comparison and let you guys decide whether you think these are interesting to you or not. So just to kick it off with, a couple of weeks ago, I made a similar video, and Mr. Captain Black said boring payers are the best. That was related to my dividend-paying energy stocks. And Matev, I'm not quite sure where we're going here with the names. It looks like boring Canadian is what I was looking for. But then Providence said more oil stock fundamental videos, even though there are a recession, it's bad to hold oil stocks. I still like those videos. Oil stock fundamentals, right? So I'm going to give you sort of a little taste of all of these, because many of my stocks are dividend payers. But just to set the stage, why energy, right? So when we think of energy as a commodity, oil and gas specifically, obviously this is used for generating electricity. It's interesting to note, and this is data sourced from the IEA and the World Bank, there's no such thing as a low energy rich country. So any country that has a lot of energy, that has the ability to mine for coal, to generate their own oil, natural gas, etc., are by definition a wealthier country than the ones who do not. And you can see on this little graphic that I've shared with you here, right at the top on the right-hand side is Norway. Norway is actually the wealthiest country in the world. And the primary reason for that is oil and gas, especially natural gas, especially today, because they can sell it to the European Union. But you can see the dividing line between the countries that have and the countries that have not. If you do not have energy, or if you are not energy rich, you are by definition, unfortunately, per capita, a poorer country. So one thing that I do that you can do as well is I subscribe to TipRanks. Now, I know some people say TipRanks, and including myself, sometimes I say analyst, schmanalyst, right? The analysts sometimes get it horribly wrong, and sometimes they get it right. But what I do is I actually subscribe to TipRanks, and I get a notification in my inbox. This is just over the past couple of days, all of it, by the way, in the last week or so. And I get this email basically once a day that says, the stock in your watch list has received a new analyst rating. So all the ones that are here that don't mention which stock it is, you'll see a couple of the emails say Enbridge, but the ones that don't actually mention which stock it is actually is Devon Energy. So analysts have been reiterating their rating on Devon, or otherwise increased the potential target price for Devon over the past few weeks. There's been a lot of interest in Devon Energy. And of course, as you would probably know by now, I'm long Devon, and Devon has been on a steady decline and has been a horrible stock. But in essence, there seems to be a lot of interest, not only from insiders, but also from hedge funds and equity firms and people like that getting back into Devon. And many of the analysts have kind of changed their ratings on Devon over the past few weeks. Enbridge has actually been on an uptick lately, and you can see just by looking at my emails here, just past its 52-week high a few days ago, 38.51. Later that same day or the next day, 38.85. The next day, 39.31. This is Enbridge in the United States, not Enbridge in Canada. The ticker symbol for both of them is ENB. So I subscribe to that. You can do it too. It's free. And that way you can keep tabs on your stocks without having to look at your portfolio every day or every week or however often you do it. So my 5 stocks that I'm comparing here are actually 5 different types of positions. 4 of them are equities that I hold outright, and the other one's an ETF, which is an exchange-traded fund. And I put them in alphabetical order just to be able to maintain the same sequence in terms of sharing the information with you. So right at the bottom, if you follow, I have Devon Energy, Enbridge, Occidental Petroleum, Petrobras or Petróleo Brasileiro SA, and then my ETF, which is S&P 500 Energy Sector, SPDR. This is the XLE ETF. I've spoken about this one many times, so I'm not going to dwell on it, but I do want to compare them side by side because I actually hold all five, and all five of these are large positions for me. In some of them, I've been in for a long time, like Enbridge and XLE. Others, I've been in for a shorter period of time. Devon, my cost basis is just below $50. And on Occidental Petroleum, my cost basis is around $10. And Petrobras, I've been in and out of. Currently, I hold Petrobras prefers, which is PBR.A. So they're similar, but not the same. So Devon is oil exploration and product. Enbridge is production and pipeline. It's also the natural gas utility for the province of Ontario in Canada. OXY is US integrated. PBR or Petrobras is emerging markets. And then, of course, not applicable would be XLE because it's an ETF, which is an exchange-traded fund. And the two largest positions in XLE are Chevron and Exxon, respectively. Exxon is the largest of the top 10 and followed closely by Chevron. So the technicals here for you technical geeks. When we see a 20-day raw stochastic that is greater than 80, that means the company has been overbought, and now is probably not a good time to buy it. And you can see I have almost 100% on Enbridge, and I have 81% on Petrobras. I'm not too sure about Petrobras because Petrobras is really trading low right now. So even though the analysts are saying sell, I think Petrobras is actually a buy, but you may want to add it to your watch list, right? And then you can look at the analyst rating over here. Only one of them has 100% buy, and ironically, that's the one which has the highest 20-day raw stochastic score. Conversely, if the 20-day raw stochastic is below 20, and OXY is kind of heading that direction because the stock has pulled back so much, it's around about 29%. That means effectively it's completely oversold, and you could probably open a new position. This doesn't really hold true, and it's not something that you should follow in isolation, but it's certainly one of the indicators that you can use to help you make a decision as to whether you want to open a new position, add to your existing position, or even exit your position. More important and better for me would be the price earnings ratio, TTM trailing 12 months. If it's less than 15, it's usually attractive. So Enbridge is too rich at 19, and OXY is still too rich, even though it's pulled back sharply at 16. So I'll leave it for Warren Buffett to buy, and I'll just hold. But you can certainly see that Devon is looking like a buy with a PE ratio of only 8. And look at Petrobras, only 4. I still maintain it's the cheapest super major that you can buy in the energy sector. And even XLE, the ETF, has got a price earnings ratio of only 9. So good time to buy, even though the analysts say sell, 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 almost without any exception. The exception being Enbridge, which is probably the one you shouldn't be buying right now because it's too expensive. What I'm doing here in the comparison is I am comparing the market cap. So the market cap or market valuation, which is the number of the total number of outstanding shares multiplied by the current stock price, divided by the annual sales of the company that is generating, right? So here I have a company that's worth or valued at $28 billion, and it's generating sales of around 15 billion per year. So it's almost 2, right? 15 and 30. And then you can see right next to it is Enbridge. It's generating approximately 32, and the market cap is 83. So this is another indicator that I use. If this number is very high, generally speaking, then the company is less attractive to get into. So if you kind of follow my thinking, and we just go across here to the right, and you can see Petrobras is below 1, right? That means Petrobras is currently generating more revenue or annual sales, $102 billion, 102.5 almost, compared to its market valuation, which is only 95 billion. Now, you have to be careful when you use some of these ratios, including the price earnings ratio or 20-day raw stochastic, or in this case, looking at sales to book or whatever, because sometimes the ratio is giving you bad information because the ratio might look good for all the wrong reasons. With Petrobras, most of the ratios and most of the fundamentals of the company actually look pretty good, you know, so I'm not too worried about Petrobras at this point. But I did make a comment. So our friend Vinny Gupta and I had some sidebar conversations, and he asked me if I added to Petrobras, and I said I'd add to PBR.A if it dipped below $12. Well, it didn't, so I didn't. So, you know, if it does drop below $12, I'd be tempted to buy some more because then it's like super cheap. But for now, I will just hold. Next ex-dividend date. So you can see in terms of the date line here, we have a couple coming up in September. So Devon Energy reporting on, going ex-dividend on September 13th and OXY on September the 10th. As for the others, they are beyond their last ex-dividend date, so you're not getting any dividends. PBR, last date was June 13th. XLE pays a dividend of about 3.5%. That one was June 24th. And just a few days ago, Enbridge passed their ex-dividend date. They're paying a nice dividend of around 90 cents or so from memory per share. So it's a nice rich dividend. Currently, it's yielding approximately 7.5% on an annualized basis, Enbridge. So I hold Enbridge. I've had it in my portfolio for a long time. It's a savings account for me. I just sock away the 7%. If we look at it in picture format over the past 1 year period, you can see the outlier here is this sort of what's this purple. That would be Petrobras. Enormous spikes, right? So 3 huge spikes over the past 12 months. You know, this thing is very volatile, jumping up and down, whatever you. The good performer of late has been Enbridge. You can see the, if you can sort of follow this light blue line here, it spiked a little bit, then it went down, and now it's been on the up, right? So it's going up, 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 as I just shared with you in my email folder that I showed you just a minute ago with TipRanks saying Enbridge has just hit another 52-week high, pretty much almost every day over the past few days or so. And then my worst performer, of course, Devon Energy. The other ones have been kind of flatlining, but they pay a dividend. So even though they're flatlining, I'm still making some money. Let's look at them quickly on an individualized basis. So Devon Energy, you can buy currently for around $44. My current average cost basis over multiple accounts, because I have Devon in, I think, 4 or 5 different accounts for different reasons. Devon is currently sitting at around 44.60 or thereabouts. My cost basis is around 47 something, maybe close to 48. So I'm down, 7.5% or so. You can see over the past 1 year period, which is what we're looking at here, is down about 11%. And it hit a high just a couple of months ago on April the 10th of $54. So it's $10 off that high. So it's probably got some uptick here. Potentially, we don't know where it's going, right? Because we cannot predict. And you can see right at the bottom, when I look at the snapshot on Google Finance, it also gives me a peer comparison, which includes Enbridge, which is my steady Eddie, right? It's a foundational stock. It just sits in my portfolio, and I'll probably never sell Enbridge. I just hold it and keep it. The PE ratio, as I said, is around 8, so it's a pretty good buy. So what do the people at TipRanks actually say about Devon? So currently we have 19 ratings. So 19 analysts are covering Devon, and they say it's a moderate buy with a target price of around, this is average, 57.67, which is about a 28% upside from where it's trading right now. So if you have a position in Devon, you probably want to hold it right now. And if you don't have a position in Devon, you might want to do a little bit of a deeper dive and say, do I want to add this to my portfolio or not? And you can see the analysts are pretty mixed here because we have a low of 43, which would be much more or less in line with where it's trading currently. And then we have a high of 71. If it is 71, of course, most people who hold Devon would be very, very happy, in addition to the fact that it pays a very nice dividend. How about Enbridge then? So it's around $40, right? So over the past 1 year period, now it's up about 10 and a bit, 10% plus it pays a dividend of 7%, 7 plus, so about 7.5%. So if you hold Enbridge long, you're up about 18% over the past 1 year period. So you're probably happy and you're doing okay. The reason why some of its peers here at the bottom are Canadian financial institutions like Canadian Imperial Bank, which is CIBC, or Royal Bank of Canada, which is RBC, is because these banks pay a dividend that is quite nice and juicy as well. It's not as big as Enbridge, but they pay dividends of around 5% or so. So that's why it comes up on the peer comparison, because if you want to hold a Canadian equity that pays you a nice big juicy dividend, you might want to sort of spread your risk between Enbridge, which is an energy stock, and one of the financial institutions in Canada. Right now, I don't want to get into any financial institutions, especially in Canada, because the market there is way too unpredictable for us right now. The dividend yield, as I said, at the bottom is almost 7%. In fact, right now, based on the current stock price, is actually just over 7. There's no real upside here. It's a $40 stock. And the analysts, if you can see, it's a much narrower range, 36 to 43. So currently it's trading at around 30 something, so it's near sort of average. And the high is just 43. So you're not going to expect too much here, but you might get another, 5 to 10% uptick over the next 1 year or so, plus the dividend. So it's a foundational stock. You're not going to get rich holding Enbridge, but it's, for people who are more risk averse, is probably a better stock to hold. So Occidental, for the people who didn't get into Occidental Petroleum when I did, which was around about the just post the Anadarko acquisition, when the stock literally just tanked into single digits and you could buy Occidental for around $8-9 or so, that would have been a good time to buy, right? So I don't know if I would even buy Occidental Petroleum at $58. I think I will leave all the outstanding shares for Warren Buffett to buy, and I'll just hold my position. One of the reasons why I hold my position is because although the dividend down here at the bottom on the right-hand side is only 1.53%, my cost basis is only about $10, which means my dividend yield is actually more like 10-11% as opposed to 1.53 because my cost basis is so low. Its peer comparison down here at the bottom includes ExxonMobil and Chevron. If you want to be less risk averse and you don't want to hold this horrible stock, which is Occidental Petroleum, which is, by the way, how I started my YouTube channel, and I still have people calling me Mr. Oxy today. If you want to be more risk averse, you can just buy Exxon and hold that as a foundational stock. Today, I don't see Occidental going to $100. Because my cost basis is low, I'll hold it. I'm not sure. I might take some profit along the way. I haven't decided on this one yet. The jury is still out. How about Petrobras? So this one, as I said, is very, very volatile, right? So it's jumping up and down, and you can see at the bottom here, it actually includes a couple of smaller cap companies. Many people sometimes ask about Schlumberger, and of course, in another Brazilian iron ore manufacturer in Vale. I'm not sure if I'm saying that correct, but anyway, that's kind of what it sounds like to me. Petrobras over the last 1 year is up about 10%. My cost base is around $12 or so. That's why I said at the beginning, if it dips below 12, I'd probably add some more. But for now, I'm comfortable just holding it. We've pretty much done for the year in terms of receiving dividends, and they say pay a special dividend or something like that. So I don't see too much upside there in terms of dividends, but we might get some upside on the stock price if these ups and down swings continue and it starts sort of edging up more towards the $17 it was trading at just a few months ago in February. For me, Petrobras is just a hold. And then the ETF, which is XLE, you can currently buy for about $90. You can buy this one and pretty much just sock it away. It's almost like my example of Exxon or Enbridge, right? You can just buy it and you can just hold it. It is already diversified for you. That's 10 super stocks. The top 10 holdings in this particular ETF are great stocks, and almost 40% of its holdings is Exxon and Chevron, respectively. It pays a dividend of around 3.5%, so you got a little bit of a hedge there as well. But XLE is also one of those that you can use as a foundational stock. Stick it in your portfolio, tuck it away. Don't worry too much about it. You don't have to look at it every day or every week or whatever. It'll be okay over the longer term. You'll be fine. And if you're 20 years old, by the time you get to my age, this $88 a year will probably be more like, $880 or thereabouts. But anyway, it's one of these that you can just keep and hold sort of forever. If we compare all of them sort of in a graph over the past 1 year period, as I showed you earlier, there were these massive spikes, peaks and valleys for Petrobras. The other ones literally just follow the same trajectory, right? So some of them have done worse than others. And there have been times when Devon underperformed all of them and something else like Enbridge overperformed the others. But then again, they diverge, and sometimes you get different numbers popping up. So right now, Petrobras and Enbridge are actually performing quite nicely. Occidental is sort of more in the tank with Devon. You can see this at the bottom here, but overall, it's almost a wash, right? Because if you take Devon and Oxy together, they're both down, let's say 10-11%. And if you take Enbridge and Petrobras together, they're both up around 10%. So that's kind of like a wash. And then, of course, if you also earn the dividend, you are actually making some money, even though the energy stocks seem to be going nowhere. So that's kind of, that captures my sentiment for you, which remains bullish on energy. Why does it remain bullish on energy? Because energy is something that we use every single day, everywhere in the world, regardless of where you are, regardless of what you do. Even some of the people in some of the poorest countries in the world are using mobile technology every day. They're banking on their smartphones. Almost everyone in the world has a smartphone. Those have to be charged. almost everyone in the world is using some form of energy, whether it is to cook or clean or light their homes or whatever the case might be. Energy is here to stay, and fossil fuels, there's no such thing really as fossil fuels, but the name is going to be with us for a long time. It's multi-generational, and you can hold these things for a long time, until we invent something that is completely significantly superior to what we know today as fossil fuels. We can just buy things like oil and gas and coal and things like that. It's no problem. It's not going to go away. Not very soon anyway. So on that happy note, I'm going to leave you for now. And what I'm going to do on the next video is do a bit of a catch up on some of the uranium stocks, and just add to the video that I made last time, which was Cameco, which is my largest uranium position. I'm going to talk about some of the small caps or smaller companies that you may want to add to watch list as well in the uranium sector as part of the energy sector. So on that happy note, goodbye for now. Thanks for watching. Take care. Bye.